Welcome all, Steve Parisi here with IBC Global. Hope the day is off to a fantastic start and everyone's doing well. Today, we've got our friend and colleague, Denzel Rodriguez here. Denzel, how are you today?
Doing well, my friend. It's a pleasure to have you. Pleasure to be on your platform and to, provide some value today. I'm excited about today's topic. So, I'm ready to dive right into it.
Let's have some fun. Hey, what's the temperature down there in Florida? Let me ask that first.
Well, actually last night, so it's cold to us. It was like in the high 50s, low
Yeah.
60s.
So I went for a run this morning, and with the windshield, the temperature was -2 up here. I'm like, ugh.
Wow.
I was not having fun, but
Oh man. But yeah,
anyway,
woke up
yeah,
this morning. It was in the mid 50s, 60s, and
okay,
I think it's been floating around like that till today around 70. So
okay, that's
nice,
pleasant, nice.
wonderful.
Well, I'm jealous. All right, let's talk about finance. All right, so today you had a good topic that you wanted to go over, which is utilizing cash value life insurance like we always talk about, but really for a business owner, and what are the differences between using it for a business and as an individual, pros, cons, what can we deduct, what can we not deduct, all of that good stuff.
Correct. So in my situation,
Mhm.
2019 had a really good year, over quarter million in revenue, and then in 2020 I more than doubled, pretty much doubled my income, just under half a million in revenue, and had my normal quarterly conversations with my CPA, and she brought up the whole idea, like, look, you have a lot of profit. Let's look at opening up a C corp to send the profits from my main business to another business, C corp. And I was like, okay, that's cool. The other thing she mentioned was life insurance, where your business purchases the pays for the premiums, you get a deduction, all this stuff. And I was like, let me bring it to Steve on that and get some insight. As of right now, I currently have two uh, personally funded life insurance policies through IBC Global, right? One with Mass Mutual, one with Guardian, both in their second year, approaching the third year, in 2021. And so, very curious in terms of, like, if you're a business owner like myself, you're in profit, right? A lot of profit, and you want to say, maximize on your deductions, make sure you minimize on tax, and operate a healthy business where you're maximizing your profit. So wanted to get your insight on, what should a business owner like myself do, or people that are watching, when they get presented by the CPAs or their
Yeah.
financial advisors on funding a policy through your business. What would be, like, maybe some pros, some cons, and I
Mhm.
guess what are the options that exist right now with that?
Yeah, yeah, definitely. No, good question. And it comes up so often. And, just to kind of set the stage properly, I'm not a CPA, so, any tax talk we give here is just, our experience and opinions. None of it is legal tax advice. Always consult with a CPA or tax attorney. Um, but on your point, typically as a business owner, if you're interested in a cash value life insurance policy because it's an asset on the balance sheet, perhaps you're using it as key man insurance, maybe it's designed for executive retirement benefits, maybe it's designed to use as a personal line of credit and grow your business just like you would do personally. Why so many people utilize cash value life insurance, whatever the reason is, the question that always comes up for business owners is, hey, I love the fact that the cash value can be accessed tax-free with a life insurance policy. Can I deduct my premium payments and still use it tax-free? That is what it always comes down to. Can I deduct them? But then the back end question, or what we need to make sure we make them aware of, is if you deduct it, do you still have access to that money? So typically, what happens is if you deduct your premium payments, I should say your total payments in a life insurance policy, there are ways you can do it. For example, with a C corporation, you can deduct a portion of your payment. Typically, it is the base premium component piece, not the PUA, which is where you and I are encouraging everyone to shovel their money to maximize the cash value. But it is possible to deduct fully or partially the base premium piece with a C Corp and still have access to the cash values. So that's often where a C Corp is used, utilized, or encouraged. Um, but aside from that, even with that said, a lot of times people look at it like if you're looking to pay in, say, as a business, $100,000 per year, and your base premium is $10,000, that means 90,000 you're directing towards riders that accelerate the cash value growth. To be clear, that PUA component and the attractive, the lucrative part of a life insurance policy to the business and you as an individual is typically not tax deductible if you want access to that cash value over the course of your life and the life of the business. Questions on that? There's more to it as far as ways you can deduct payments, but any questions on that specifically with the C Corp?
Right. So I send my profits to my C corp, and then, hypothetically speaking here, if I was to do that, the business is purchasing a policy on me, correct? And then,
Correct. Mm-hmm.
let's say I do with the 100K, we do a 90-10 split. In terms of the design, with a whole life, and you're saying only the 10K, right, is the deduction part. But in regards to the net cash value that I'm able to borrow out of that policy, that is, say, not as flexible, or
Yeah, so you'll have the same flexibility actually of accessing it if you set it up through a C Corp. I mean, the benefit to setting it up through a C Corp instead of you as an individual is like your CPA is encouraging you or saying, hey, you can do this, is you will be able to deduct some of that premium. So you will capture a small tax deduction there. Now there's pros and cons to C corporation. I mean, I'll let you know personally, my entities, we own a couple businesses. They're S corporations, S corps, and LLCs.
so you
First,
keep it like that.
I do, but again, a C corp has its place too. So, and that's a conversation with you, what you're trying to accomplish with your CPA and other advisors and such. That's where an individual can make that personal decision. There's no one way is the only way forever.
Right.
Yeah.
So when I borrow from the cash value in that instance, you're saying that's not a tax-free event.
Um, it with a C corp, it still potentially is.
Still potentially is. What would make it not
Yeah,
a
that
tax-free event?
that's the big thing because most, I would say, of your clients and ours, some own C corps, but most own S corps and LLCs because yeah, they can be more flexible. So if you have an LLC, let's say that you do a lot of real estate investing with, and you say, hey, I want to take out a policy on myself, but I want to fund the policy through my LLC. And because it's an insurance policy, I'd like to deduct the full payment. So you utilizing the same example, let's say you, Denzel, own an LLC and you want to pay in $100,000 per year into a policy. And we'll assume it's a 1090 split. You're juicing it for cash value, $10,000 base premium, 90,000 PUA, and you'll love it. Now, when you ask the question, hey, because my business is paying for it and I'm booking it as a business expense, can I deduct the $100,000? The answer is no.
Right.
So we cannot do that. Well, let me rephrase. It's no if you want access to the cash value. It is very possible to set up a cash value life insurance policy within a qualified plan or structured in a manner where you can deduct, say, the full $100,000. So there are what are called 412 and 419 plans. That's one example. They are qualified accounts,
Which
which you can position life insurance and typically fixed annuities, fixed insurance products with guarantees in there. And let's assume you said, okay, I want to pay $100,000 into this policy. I'm going to set it up under a 412 or 419 umbrella, and then I can deduct the full $100,000. You can absolutely do that. So the advantage, huge tax break up front. Disadvantage, it's a qualified plan.
money's locked up.
You've got correct. So you've got very similar restrictions to what you would have with a 401k, an IRA. Money's locked up. If you want to access it, business owners want access to their money. I do. I don't like qualified plans because if there's an opportunity, like if we want to rehab our building or set up a high-end recording studio, I want access to capital so we can do that and move fast. Qualified plans have a place, but a lot of business owners, depending at their level and number of employees, don't always go for it.
Right.
Mm-hmm.
Right. I guess if you're like maybe not doing anything with your cash, you have no intention to move this, you have a big stockpile of cash, and maybe there's a place for that. But for maybe individuals like us that are very cash flow aware, we tend to like to just have liquidity in terms of revolving debt and also just straight up cash capital on hand to be able to put it back into our business, expand our operation, or like you said, jump into a real estate investment deal, or maybe a venture capital, angel investor, silent investor, or maybe you just want to help somebody grow and you want to feed into their business idea. So you're constantly being liquid there. So okay, so in that sense, my follow-up question was: is this something that you would practice yourself? And clearly, that's not in your that's not in your portfolio, your goals, right?
Mm-hmm.
And in a way, I was just very curious to it, because it's like what you'd say, the general advice that is given to a new business owner. I'm only 2 years in. Why am I trying to lock up my cash? Why am I being told this?
Mm-hmm.
But that's general knowledge that we get. So for those business owners that are watching this and listening, you're a brand new business owner, maybe you're just getting started out. Is it really worth locking up your cash for, maybe the first 5 years of your business? And really, that's the time where 90% of businesses fail in the first 5 years. So by having access to cash at all times, another COVID hits, right? We're in a pandemic right now.
Mm-hmm.
If there's a recession like in 08, 07, right? Being liquid is what really helps people get through the tough times. And then when it's good, it's good. And when it's bad, you have cash.
That's the key. And I mean, we can talk about this all day long because it gets me excited, whether you're small or large. And you have so many examples, but ones that hit people and A, they already knew about it, or B, they just kind of go, oh, check that out, are companies like Amazon and Apple. So Apple, right, 2008 hits, everyone's suffering. The majority of people are suffering. They're struggling regardless of your company size. 2008, 2009, right, in the midst of a recession, Apple has their best year ever.
Yeah.
Right? And they do not sell cheap devices. They don't. How do they do that in the midst of a recession? They had cash, a lot of liquidity, and they leaned into it when the competition had backed out. That's what they did, and it worked beautifully. COVID hit, everyone panicked with everything going on. If you look at the digital ad spend, what happened? It just plummeted for a period of time. It did.
And that's when I got in. Actually. That's when I started going in.
Yeah. We leaned into it as well. And in that moment, it is the scariest thing to do because for a period of time, you don't see any results and there's a chance it might not work too. So it's a risk. By all means, it's a risk. But on a bigger scale, Amazon, they're cash rich, to say the least. What did they do when COVID hit? Look at their stock. Yeah, just skyrocketed, and they continuously hire more people. Now they needed to fill the demand, but they could have easily went on defense and had that same mentality, hey, play defense, but they said, let's lean into it. So if you've got money locked up in a qualified plan as a small business owner, whether you're doing a few $100,000 per year or even 7, 8 figures per year, I mean that's still small to a degree, depending on how much cash goes out the door to satisfy your employees, overhead, and everything else that comes with it. That you're like, where's the money go at the end of the day? But keeping liquidity is very important, in my opinion, as a business owner, because it's something you're in control of to continue to move forward.
Got it. So with that being said, since you're not practicing um, using your business to pay for your policies through
Right.
a, for business or Keyman,
Hmm.
what you do is you personally fund your policies. You're not getting a deduction on that, but in your case, you're able to now, pull money from your personally funded
Yeah.
policies. Do you feed it back into your business in a unique way, or do you just use it for personal? I wanted
Yeah.
to kind of get
Good.
some insight as
Yeah.
I continue to build my two policies and
Sure.
start really getting access to cash. I know I've done I haven't done too much in terms of putting the money back into my business. Actually, what I've been doing is the salary that I pay myself from my business funds the policies, and then I borrow out of the policies and basically live off of them on the personal side. And then I'll personally buy gold, or I'll personally buy silver. I personally buy maybe different hard assets, maybe cryptos, and little things here and there. Nothing too crazy,
Yeah.
but just simply exploring. And then the other thing is just I try to pump it back into my business to keep growing. So I want to get
Yeah.
your insight on
Definitely. No,
that
good, good.
movement.
Yeah,
Yeah.
absolutely. I mean, everyone does it a bit differently because there's so many ways to do it. I mean, I am all about the convenience with simple transactions. Meaning, don't give. Sometimes you've got to put work into it. You can't have everything in life convenient. But with funding a policy, like the tax structure and such, what I do personally is my S corp pays the premium, but it's not a write off. So what happens is, as it funds the policy, I own this S corp 100%. So as I pay that premium with any amount, whether it's a premium or PUA payment, it would function like an executive bonus plan, where that is actually booked. The CPA looks at it and says, okay, we're going to book this as income to you. So even though you didn't take money out and put it in your own pocket, Steve, this will still count as taxable income to you as the business owner, which I kind of view it and say, okay, I mean, if there's a profit that's going to pass through, I'm going to have to pay tax on it anyway. So I do it in that manner because I do leave cash in the business account rather than, I don't take much out personally because I like leaving it in there. So
Same here.
yeah, if we've got an excess on top of the excess and I can fund it with more where I'm still very liquid for opportunities, I'll do that and fund it with the S corp. But from a taxation standpoint, there's no deduction or anything like that there. I wish there was, but I want the liquidity.
Got it. And you're okay with that because I'm sure there's other strategies that you're doing to
Yeah.
reduce
Hmm.
your tax liability. Um,
Correct. Yeah.
do you have a unique process in terms of when you take out a loan out of your personal policy,
Hmm.
you because it lands in your personal checking account, correct? When you take the
Cor-
money out,
correct. Correct. It does.
how
Hmm.
do you ever move that money back into your business and use it for business and then get the deduction on certain things, or you just keep it personally?
Yeah, no, I mean, if I'm going to use it for a business expense, I mean, I'll move it into the corporate account and then make those purchases there. Because obviously you've got a tax deduction if I'm going to invest in a $100,000, coaching plan or hire a consultant for 12 months or something like that, which is a tax deduction. But what I'll do with that is just try and keep everything, the paper trail, very, very clean, have it go directly in the the company account for my personal policy if possible, and then disclose everything to the CPA so I don't have to think about it or worry about it. I want to understand it, but at the same time, like, hey, here's the information, and then make it easy so I can remain focused on the most profitable areas, the business.
Got it. So you just said send money from the policy to the corporation.
Mm-hmm.
How exactly do you
Yep. Yeah.
log that, so to speak? Is that something you tell the insurance company to send it to that specific, check
Yeah.
routing?
Y-
Or
Yes. So
okay,
you could do that. So as a policyholder, right? So if you're considering getting a policy, or if you or I do it, what you could do when you take that policy loan out, if it's through your online portal or if you worked with our office directly, you can specify the bank account you want the funds sent to. Now, what I'll add is if the account is an account number that the insurance company has not seen before, they'll question it and ask for proof. They'll say, hey, we'd like to see some proof that this is actually your bank and you're not doing money laundering or anything like that. We want some legitimacy here. So you will have that to say, hey, I never used this bank. Here's my bank account. It's under my company name, but here I'm the president. I own it 100%. And they say, okay, no problem. Here you go. So they want to make sure things are clean in that respect. But you could very, very much so have it sent to another account in your name personally, a business you own, and the company will do it. You may just need to provide verification you own it. And then the next step I'll take is making sure that that's documented, or I just make a note to say, hey, CPA, this is what this transaction is, because we've got bookkeepers that provide a monthly P&L. So as they see money moving, if something's out of line, they question it and say, hey, what is this? Which I like. That way, in case I forget, someone's taking that extra proactive step.
got it, got it. Because I'm always doing research on YouTube and looking at
Yeah.
other insurance agents speak of like more complicated ways of kind of feeding money back into the business. This all sounds great, but from a practical standpoint, I'm like, is there a simpler way, right? So the way that I've seen so far is they'll have their personal policy, they bar it out, lands in their personal checking, and then they write a loan from themselves to their business,
Yeah.
and then somehow remove all tax or something
Mhm.
like that, and then they only pay tax on the
Yeah.
interest that was charged. I think
Mhm.
that's a legitimate thing to do.
Mhm.
It's just I'm wondering, like, is it worth all that uh, work, so to speak,
Yeah, that's the
work to
thing.
do all that?
Yeah, and you kind of hit on a point there too. I mean, if I can save X amount of dollars in taxes, like legally, legitimately, by executing a few strategies, I'm down for it. So how I would process that more or less is to say, okay, what is the specific process here? What type of specialists or people do you need in-house, from an accountant or CPA? Who do you need to align with to make sure they can do it from a tax preparation standpoint? And then create it so it is so convenient for the business owner that it's not going to cause them a headache. Because what I hate is having to stop what I'm doing, look over paperwork I don't understand, sign off on it, then sign off it 18 more times, kind of like closing on a home or a mortgage or something like that. You ever do that?
No, but I mean, I've signed on a car, and I just see the amount of
Yeah.
signatures just for a car. So I can only
Car.
imagine what a home is like. I mean, it's
A
ridiculous.
home, a refi. I mean, the amount of times you got to provide documentation. Some banks are easier than others, but it's a process and it's time consuming. And that's the big thing. So I'm like, all right, just show me what I need to sign. But if I don't understand it and I'm working with someone I don't know or trust, then I'm going to take the time, analyze it very thoroughly, because that's my personality. And that's time. So to flip that situation, if someone says, okay, there's a way you can deduct it, I'm like, all right, let's look at that. If that's what you want to accomplish, let's see exactly what you're trying to do, how we accomplish it, and then all of the complex items in the back end, how much paperwork needs to be completed. Do that for them as much as you possibly can. This way it's very easy, and they don't get frustrated saying, I got to stop what I'm doing again. that's what I think should be done for business owners. Everyone really, when a business owner views it, hey, I got too much going on. Like I got to focus on the company. Otherwise, I'm going to fall behind one day, which sets me back a month in reality because I'm going nonstop. Cool.
Well, that's pretty much that was my main focus, is just getting some clarity
Yeah.
on that specifically as a, young business owner entering, my third year
Yeah.
into business, and, hitting, large profits. And then obviously the
Smart.
conversation of tax inevitably comes up, and, just looking at what's the most effective thing for me to do that will continue to help me expand the business without locking up too much cash to try and save 40 cents on the dollar.
Correct.
Like I want to either save the full dollar or put that dollar to work and make three more dollars
Yes.
with it, rather than try to save 40 cents on the
Yeah.
dollar. And then that dollar is now locked up till 59, and it's just not a
Yeah.
reasonable thing for me to operate in. And again, I think this type of information is untraditional, because like I said, I'm being fed traditional, consistent information from, you would think, credible, CPAs, attorneys, and financial advisors that are promoting these things. But then you start stepping into creative finance and, unique ways of cash flow production, being cash flow aware of your business operations. And so it's
That's right.
just really interesting to see those two different dynamics. It's not to say one is right or wrong. It's just which is the most effective for Denzel, which is the most effective for Steve, and
Yeah.
what's the most effective thing for the people watching that are also um, business owners or aspiring to be entrepreneurs, business owners.
Absolutely. The one other item to mention that fits in to exactly what we're talking about is as you grow and have employees, and then valuable employees, key members, executives, is what a lot of companies do, and you can do this regardless of the structure. There's different ways to do it. Is retention strategies. I call it the formal name is a SERP, Supplemental Executive Retirement Plan, Non-Qualified Deferred Comp. What it is if you own a policy, if you own a company and you have several employees, it is a strategy to retain your top talent, key employees, and then also reward them on the back end. And it's done with cash value life insurance. So how it works, you kind of go through an exercise. I think a lot of people will find this interesting. A lot of companies do this, and this is my background where I learned about the actual cash value life insurance and how to optimize the cash value. Is let's pretend that I own a company and you, Denzel, are one of my executives. We'll call you the VBO, Velocity Banking Officer. Gotta have fun.
Love it. Love it. Love it.
So I say to you, okay, Denzel, I'm going to take this life insurance policy out on you. The company is going to own it. So the company takes a policy out on you. Let's say it is a $5 million death benefit, and the company is going to pay the premium. So you don't have to pay anything. The company owns and controls the policy. So the cash value is an asset on the company's balance sheet. The company is the beneficiary. So if you die, I, as the company, receive that $5 million death benefit. So at this point, as I'm telling you this, what questions do you have?
How does this benefit me?
Correct.
Yeah,
Other
well,
than other than if you die, I get $5 million, right?
right.
So here's the benefit. So for the company, so if you're a business owner looking at this, you've got cash value as an asset on your balance sheet as you fund that policy. Denzel's the insured, and you also have a form of key man insurance. If he dies, $5 million comes back to you. Now for Denzel, what I'm going to say to you is, if you stay with me for the determined vesting period, let's say it's until retirement. You've got to stay with me until age 65. And it could be 10 years, 20 years, it could be performance based. Companies do things all differently.
Right.
But we'll pretend for this example, you've got to stay with me until age 65. If you do that, I'm going to pay you a retirement benefit, almost like a private pension of $200,000 a year from 65 until you decease. The thing is, you've got to stay with me until age 65. If you don't stay with me, you don't get that benefit. So it creates what we call golden handcuffs for companies to lock in their top talent. And then it makes it very hard for a talented employee. If you go off and say, okay, I'm going to start my own company, you leave, you walk away from $200,000 per year or whatever the amount is, depends how much we fund the policy, you walk away from it. So that's hard to do for a lot of people.
Right. Right. I mean, especially, not everybody wants to be
Yeah.
the CEO. Not everybody wants to be the number one, everything's on you responsibility. So there's some great number 2, number 3, number 4, number 5 type people in companies.
Yeah.
And it's like that would be, great. And then maybe even there's ownership if they kept, staying with the company for 30 years. I'm sure there would be some more opportunities that would, eventually open up, and maybe even the opportunity to overtake that company, especially if I'm the youngling in a company where there's, older individuals. They got to recycle, move, arrange. So those are some interesting things to
Definitely.
really consider.
Yeah, absolutely. And to kind of polish off how the plan works, because a lot of companies are interested in this. If you produce the company $1 million per year and you say, hey, I don't want to lose him, here's a way that locks you in per se, and you feel good about it because you get a long-term benefit in addition to just pay bonuses and such over time. But at age 65 until death, we're going to pay you $200,000 per year or whatever the amount is. When you die, let's assume it's age 90, these plans will always construct them in a manner where a death benefit is remaining in order to recover the premiums paid, and some will typically account for inflation. Point being, a death benefit flows back to the company now, income tax free, refills the bucket, so we recapture everything we paid out. Companies,
Wow.
yeah. So when you hear of these, big corporations, banks do this with BOLI, which is a little bit different, but it has some similarities. This is what they do. So you've got the benefit of locking in your top talent, which drives revenue. As the company, I say, okay, Denzel, he's, how old are you?
25 now.
25. All right, I was going to guess that. So you're with me for another 40 years. So as I build that cash value up, that's an asset in my balance sheet. I own it. I can do whatever I want with it. I can leverage it. I've got to make sure I've got the money to fulfill that promise I made you, but I can use it to expand the business over time as well. So I'm not just locking it up forever. I can't deduct it. However, on the back end, when I do pay you that $200,000 per year, I, as the company, pull it from the cash value. That's not a taxable transaction. When I pay you $200,000, I still book that as a compensation expense, which does give me a deduction on the back end. So I'll stop there. I get very excited when I talk about this stuff. So
Yeah, no, it's like, wow, that's mind blowing. Just
it's incredible.
it's a win-win for both.
Yeah.
Just depending on the type of person. Like if I'm coming into it, if I don't have a desire to, go off and start my own thing, and I want to kind of stick with a company and really grow it, from the ground up.
Yeah.
And there's so many other benefits that now, just to close out that promise, it's not just a verbal agreement, right? There's also writing and like a contract to,
100.
obviously protect the employee from not just, blindly going into something like that.
100%. Yeah, it's
Got it.
there's typically a trust involved. You've got attorneys or a firm that specializes in this that drafts the agreements. I mean, these are formal documents that are prepared. But I mean, yeah, there's a lot more to it. I mean, a question people have is like, hey, what if someone says, I'm leaving anyway? Like, what if you say, Who cares about 200 grand, Steve? I can make 2 million on my own per year. So you go off and start your own thing.
Right.
Now, let's say you do that at 30. We've got this policy we funded for 5 years. Say it's 10 years on you. People ask, like, well, what happens? I can keep the policy on Denzel when he dies. The death benefit comes back. But typically, what's done, a lot of professional sports clubs do this when they trade players and people retire early. I can take that 5 or 10-year-old policy on you, transfer it to your replacement or another executive,
Oh, wow.
and it's still 10 years old. They have to go through underwriting, but I'm not starting a new policy, so there's no new commission, no negative hit. You're picking
Wow.
up at the 10-year mark. Oh yeah, ball clubs do it all the time. So now I just keep everything going.
Yeah, you're past the
Yeah,
insurance costs in the beginning years.
correct.
You
Yeah.
blow past all that.
Correct. So there's creative, I'll call it tricks. It's just knowledge. The more you know, the more you can do. That's the thing. Is instead of having to start a new policy, cash it out, like don't go through all that. There's easier ways to do it.
Wow, that's awesome. That's some good info. Good intel in the velocity banking, infinite banking world. Love it. Love it.
Right on, man. No, I love this. I know it's been a little bit since we last connected, just with 10 million things going on, I think, for both of us. But yeah, this was fun. Good topic you had in mind.
Awesome. Awesome. Well, that's it for me.
Yeah.
Not sure if you had anything else you wanted to share.
No, that's good. Otherwise, I'll keep going a mile a minute and I won't stop. We can stop here.
Awesome. Awesome. Well, thanks for having me. I really appreciate it again. Hope this information is really valuable to those that are watching at home, at the office, in the car, right, on the way to work, and you're obtaining information on the velocity banking side, the infinite banking side, and just merging it all together. And then, implementing on the business side for business owners trying to, make sense of this and incorporate it to your finances. So you've
Yeah.
heard, you've heard it from the best, Steve Parisi himself.
And Denzel, man. And Denzel Washington. Everyone always says, I talked to Denzel Washington. I'm like, you mean Rodriguez? They're like, oh, yeah, yeah. I'm like, yeah, well, we can call him Denzel Washington. I'm sure he doesn't mind.
Don't mind at all. My goal is to meet him in person.
Very nice.
There was an event scheduled last year in 2020. I was supposed to meet him in person, but obviously
Oh,
COVID canceled it. And
yeah.
this year they're redoing it, but it's going to be virtual. So
Gotcha.
I want to shake that dude's hand, say thank you. Your name
Yeah,
is definitely, it starts conversation for
it
sure.
does. Yeah.
And it's just one of those things. Great guy, great person to,
Yeah.
listen to and follow. Love his attitude and direction.
Yeah. No, likewise. I've listened to a couple of speeches he's given. I've liked them a lot. Um, But yeah, thanks so much for your time. If anyone wants to get in touch with either of us or both of us, links below. Reach out anytime. We work together on almost everything. So you talk to one of us, you talk to both of us in a way. But appreciate your time as always. And until next time. Thanks, Denzel. Hey guys, Steve Parisi here. If you enjoyed the content you just saw, please subscribe, like, and hit the notification bell for future videos. If you'd like more information or to see some custom policies for yourself, feel free to call or email our offices at the contact information below.